Well, folks, Wall Street is setting up retail investors once again for a big problem, and we're about to get into it. It's a very important video. You pay attention to every moment of this video here today. I'm going to walk you through exactly what's going on, what Wall Street's up to here, how retail's falling for another trap, okay? Wall Street's set a few traps over the last few years. This one's completely different than anything we've seen before, and I want to explain in detail exactly what they're up to, exactly how this is going to play out, and how retail investors are ultimately playing themselves in a massive way in regards to today's video. We're also going to speak about some huge news in regards to Nvidia, some huge news in regards to Tesla we got to get to, and a few other things. But the top of this video is really focused on the subject. Pay very close attention to everything I talk about here because, it's definitely going to be something that helps you out pretty tremendously, not only over the next year, but over many years to go in the future on exactly what's going on here. So appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel, folks. I appreciate each and every one of you. And also, I want to say belated happy Veterans Day to all the veterans out there. I was celebrating my birthday over the weekend, didn't produce any videos, so I didn't get to wish everybody a happy Veterans Day. That is a veteran out there, but I know there's a lot of you guys that watch the channel, and I appreciate each and every one of you. What do you guys? So right off the top here, okay, if we go back to very late 2020, obviously 2021, we had a booming stock market that obviously got a ton of retail investors interested in the market, right? We had a lot of people staying at home. We had stimulus pumping out there like crazy. I mean, the amount of forms of stimulus at that time were off the charts. We've never seen it like that before, right? You couldn't really get yields anywhere else if you put your money in a savings account, CD accounts. So a lot of people got attracted to the stock market or got attracted to crypto, things like that, right? We also had reopening excitement. We also had revenues that were flying higher for companies. Those revenues were flying higher, one, because they came off of really low comps in 2020 because of Rona, right? On top of that, we had revenues flying because there was so much stimulus pumped into the economy. At a lot of companies, revenues were skyrocketing during 2021, right? And you had this perfect storm of investor excitement, and ultimately the S&P 500 reached all-time highs. The Nasdaq reached all-time highs. The Dow Jones Industrial Average reached all-time highs. The Russell reached all-time highs. Obviously, massive amount of stocks across the board reached all-time highs, and we still haven't actually reached new all-time highs over 2 years later now at this point in time. And then what happened from there? Well, look at this, okay? At first, people were thinking, maybe it's just to buy the dip. But no, the dip just kept dipping and dipping and dipping. Stocks like Meta, Nvidia, AMD, Shopify, Netflix, Salesforce, Tesla, Palantir, Bitcoin, everything fell 50% plus. Major, massive crash. Epic crash. When you talk about some of the most famous assets in the entire world, all falling 50+%, that's an epic crash. We had an epic crash that basically transpired from the end of 2021 through about the end of 2022. It was vicious, right? And this led a lot of retail investors to leave the market. And you can see that with, companies like Robinhood and their numbers and just all the data in general, right? A lot of people got convinced investing is a scam, right? Stocks are only going to go lower. Then you had a lot of people starting to flip at the very end of last year. A lot of retail investors specifically start to flip to bearish and start to place put option bets on stocks like Tesla, Nvidia, AMD, many others, because these stocks just kept going down and down and down. So people started thinking, oh man, they're only going to go worse from here. Recession 2023, market's going to go a lot lower. Tesla's going to $50, $60, right? Nvidia's going to $50, $60. And obviously the complete inverse happened, right? Basically people started having a view, you can't make money in the market because that's the way imagine you get in the market for the first time in 2021, you're buying everything like this, right? And then you lose 50% plus your value. Everybody starts viewing like you can't make money, and the only people that makes money are the people that bet on the downside, right? So you had just a massive amount of people leave the market in 2022, or ultimately, if they didn't leave the market, a lot of them went short the market. They're like, I'm going to make my money back by shorting all these stocks because we're going to have the big recession in 2023. It's all going to go bad, right? And here's a 1-year chart of what the reality was of all those stocks that people sold out of en masse, right? Nvidia went up nearly 200%. This is just in the past 1 year. Meta's up 188% in the past year. Palantir's up 143%. Bitcoin's up 120%. Shopify's up 62%. AMD's up 58%. Netflix is up 48%. Salesforce up 35%. And Tesla stock is up 17% just in the past 1 year. 1 year. Not from their lows. All those actually hit lows at different points in 2022. This is just a 1-year chart of these, right? And so retail absolutely screwed themselves twice in a very short amount of time, right? And so that leads us to today and what's going on, right? Which is a very interesting dynamic. So here we are at the moment where the only thing that looks like the Holy Grail is the Magnificent Seven, right? The biggest of the big tech companies, that's the only place you can be, right? And the reason being is these stocks have all performed tremendously in 2023, and this has led to kind of a little bit of a brainwashing in the stock market that if you want to make money in this market, you better put your money in Apple, Amazon, Google, Meta, Nvidia, Microsoft, Tesla stocks like this, right? Because look at how well they performed this year, right? And then the layer beneath that as well, right? The AMDs and those other stocks, right? Salesforce, that's the only place you got to be, right? And it's interesting because I, obviously on the reaction channel, I react to so many different videos, right? Bullish videos, bearish videos, everything across the board, right? And what do we hear a lot of Wall Streeters saying right now, right? They're saying, don't even buy small cap stocks. Don't even buy those, okay? They're going to have another horrible year in 2024. Don't stay away from those. Those aren't a buy. Dividend stocks, don't buy those, okay? If you're going to put any money anywhere, they're saying put it into these sorts of stocks. Okay, does that make any dang sense? Well, let's think about this logically for just a moment, okay? The Russell 2000 is down over the last 3 years. Literally, the Russell 2000 today is lower than it was over 3 years ago, okay? In the past 5 years, the Russell's up about 11%. Small cap stocks, right? Now, I went back and I said, in my entire lifetime, because I was really curious about this, in my entire lifetime, I'm not talking about my investing lifetime, which my investing lifetime is 15 years. I'm talking about my entire life, way before I got started in the market, right? But I was still on this earth since 1989. And I said, how many times in the past, how many time periods in the past could I buy the Russell 2000 for lower in my entire life than it was 3 years prior, okay? And oh my gosh, did I find something absolutely magnificent when I looked back at the data, okay? Here's the deal. One time period I could find where I could buy the Russell lower 3 years out was a situation in the Great Financial Crisis. So if I go back to May of 2007 versus May of 2010, I can find a time period there when I could literally buy the Russell lower than it was 3 years prior, okay? So boom, we got one example right there in my life. Now that's the only time period in my investing lifetime that this has ever transpired. Think about that for a moment. I've been in the market 15 years, and this was the only time period. And by the way, I wasn't even in the market in 07. I started in 08, so technically we might say that doesn't even count, okay? Think about that for a moment. When's the next time period? The tech bubble crash. The tech bubble crash when, all these internet stocks that, the internet was so hyped, everybody's putting money in all these internet-related anything, and, it might get clicks and this and that, and these companies didn't even have revenues and certainly didn't have profitability or anything like that, right? In that whole situation, yes, I could have bought the Russell 2000 cheaper 3 years out than I had previously in a 3-year period, right? The next time period, I look back and I found almost a time period. This is almost a time period, okay? In 1989 through 1992, I almost got a time period where, in a 3-year span, you could buy the Russell cheaper, okay? But it actually didn't technically fit. It was close. It was really close, but it wasn't quite there, okay? So let me get this right. There's been 3 time periods in my lifetime where the Russell was down on a 3+ year basis. And one of those time periods is right now. So let me think about this for a moment. Is it or is it not a good time to be a buyer of smaller cap stocks? Well, thinking about this logically, I would say it's probably one of the best time periods ever to be a buyer of small cap stocks. Now, do these stocks stay low for the next 3, 6, 9, 12 months? Maybe, right? Maybe. But at the end of the day, if I can only find 3 time periods in my lifetime, and one of those time periods is right now where I'm getting this sort of deal on an index, that's pretty darn attractive, right? And so I think about this for 2024, and I think about what could the market do in 2024 that could screw everybody. And I thought about this one, okay? Imagine a scenario for just a moment where big tech stocks, right, the ones that everybody's saying, okay, if you're going to put any money anywhere in the market, you better put it into the Apples and the Microsofts and all those sorts of stocks, right? And imagine a scenario where, let's say, the big tech stocks are kind of flattish, or that maybe they get slight gains in 2024, while the Russell Wilson goes rolling. And I mean, it goes absolutely flying. And I'm like, I could see that as a potential, right? I see several different scenarios being a potential in 2024, but I don't think this is a scenario anybody's really planning on. And many times in the market, it's the scenarios that no one's planning on that are actually end up transpiring. A lot of people are planning for, the stock market's going to crash next year. It's going to be a big recession. Okay, a lot of people are planning on that, and they talk about that. They've been talking about that for over a year, and that's all they talk about all the time, okay? Then we got the second group of people that is like, yeah, it could be a good year for the market, but it's really going to be driven by the biggest stocks in the market again next year. And I just think, okay, that's really the two scenarios that people planning for any other scenarios, because you kind of play for some other scenarios as well. It's not like there's only two ways out of this market. There's several different ways out, right? No, they're also saying don't buy these sorts of stocks, right? The stocks like the Revolves, the Nordstroms, the Foot Lockers. They're clearly not only saying that, but they're saying that in the price action. They're basically saying these stocks are going to be horrible in 2024. And I asked myself, are they really going to be horrible in 2024, or are these stocks going to go up 50 to 150% in 2024? Here's what I look at, okay? The consumer got absolutely wrecked by inflation for 2 years straight, right? Basically, it started in the first half of 2021. Now, people weren't talking about it in the first half of 2021, unless you know people that own businesses. But I can tell you, inflation started to hit people in the first half of 2021. It's just the media and the government didn't really start talking about it until the second half of 2021. But it had already started hitting in the first half of 2021, right? And it hit consumers hard all the way till the first half of 2023, right? And now it started to alleviate, right? And when I think about the consumer getting hit hard by inflation, you're talking about 4% plus CPI type numbers, right? Now, we're in a position now at this point in time where the salaries and wages are actually playing a game of catch up. Those have lagged a bit, okay? Those have definitely lagged the market, but they're playing catch up now, okay? And so this could actually put the consumer into a much better, stronger position overall in 2024 versus where they were at in 2022, and certainly where the consumer was at this year in 2023, right? And so I think about also, these stocks are going to have cake comps, right? And the consumer got hit so hard from inflation, so they stopped spending on Revolve and Nordstrom and Foot Locker and all these clothing-related companies this year, right? And I think about the comps are going to be cake for these companies. So I think about a consumer that's probably going to emerge a lot stronger in 2024. It's definitely a possibility, right? Because inflation numbers just aren't going to be there in 2024, but wages and salary growth is still going to be there because the employment market is still strong. We're still under 4% unemployment rate, which means businesses still got to pay out. These big companies still got to give their raises. Apple, Meta, all these companies, right? And then I think about these cake comps that all these companies are going to have. And what happened this year, right? Think about what happened this year for a moment. Well, guess what? The Metas, the Apples, all those companies had pretty cake comps. I don't want to say Apple. They're probably the one company that didn't have cake comps, them and Tesla. Outside of that, all those other big tech companies all had cake comps to comp against this year, right? Which made their growth rates look really extraordinary. Meta just reported 23% revenue growth over year, which is an extremely strong number. But remember, in this same quarter last year that they just reported, they had a very weak number, right? So now these companies like the Revolves, the Nordstroms, the Foot Lockers, all these companies are going to have numbers to comp against in 2024 of these 2023 numbers, which are cake. These are super disappointing numbers all these companies have put up this year, right? With a consumer that is likely going to be in the strongest place they've been probably since 2021. Now, put this together, and ultimately that usually means very good for retail sales. And also, keep in mind in 2024, you're still not likely going to have big ticket purchases doing very well. People still aren't going to be out there going to buy new homes, new autos, new boats, new RVs, new whatever, in terms of anything that's on a loan, because interest rates are still going to be high. So if they want to go out there and spend, it's going to be on smaller ticket purchases. Restaurants, retail, all those sorts of things, right? Those sorts of categories where somebody's going out there and spending $40, $80, $100, $200, $300. They're not going out there and spending $300,000. There's a difference, okay? So think about that for a moment. Now, I don't even, it's interesting because this is like Backpage news right now. And I'm like, dude, this is some of the biggest news in the market, but no one's It's Backpage news right now. Wall Street doesn't want to talk about it because Wall Street wants big tech to pump in the year end because they need to play a game of catch up here, okay? That's why the index had performed so well. Wall Street's funneling in money, hoping a Santa Claus rally happens here, and they're going to get that Santa Claus rally from big tech. So they don't really want to, talk about this stuff too much. So it kind of goes as Backpage newspaper type stuff, okay? Google's going through this massive antitrust trial right now, okay? And there's a bunch of stuff that's getting, let's call it divulged in this trial. That's substantial. And I'm not just talking about substantial. I'm talking about game-changing, horrible stuff for business models if certain things transpire here, okay? And the government wins in this situation. It just got leaked that Apple's getting about 36% of Google's revenue in the search deal, okay? Now, Wall Street's going to start talking about this probably in January, but I'm telling you, imagine if The government comes in and says, you can't do this anymore. Apple's revenues immediately plummet in a massive way. But not that. That's not the biggest deal. Their profitability plummets in a massive way. The hit to their profitability would be far greater, and I mean far greater than any hit to their revenue, which is even worse because people buy Apple based upon that net income number, that EPS number, okay? I think this would negatively affect Google as well. I'm just not sure how much it negatively affects, but I can tell you damn well, the biggest market cap in the world, if something happened here and Apple can't get that $10 to $20 billion a year from Google, that's pretty much, it's basically straight profit for Apple. Their business is fundamentally changed for the worst overnight, folks. Overnight. No different than the hit that happened when Apple went after Meta and changed a bunch of user-related things there, okay? And so I'm like, dude, that's a huge risk to the Qs, and that's a huge risk to the biggest tech stocks next year. No one's talking about this right now. They need Apple higher right now. They need Google higher right now. After these next 6 weeks, then Wall Street can start talking about this. Then they can start worrying about this, but not for the next 6 weeks. We're real hush-hush about this right now. That's what Wall Street is, okay? Think of it like this. The way I would put it like this, okay? If Wall Street's telling everybody you need to pile into these sorts of stocks, you might want to say, okay, is it really the time to be piling in these stocks? And if they're all saying, don't pile into these stocks, don't buy these stocks, then you got to start thinking, okay, maybe these are the opportunities in the market, right? If they're saying things that just own treasuries, just hide out there, you got to start thinking, is that really the best place for my money? I mean, imagine you sell all your big tech stocks, the end of last year because you're like, screw this, man, I'm just going to buy treasuries. Those are yielding me 4 or 5%. I can get, guaranteed money on there and I get out of all these stocks that keep dropping. And then you just miss 50%, 100%, 150%, 200% gains in just a year. That's the thing. Like you thought you were playing it smart, 4 or 5% a year. Oh, yeah. And then you missed out on a double up in a matter of the same year. And you're like, damn, man, I finally had a chance to beat inflation. And I didn't beat inflation, right? And look at this. Why don't you have a look at this? Retail traders. This is news that just came out on, I believe it was Bloomberg here today. Retail traders sold nearly $16 billion in stocks last month, talking about the month of October. Nearly twice what they unloaded in September, according to S&P Global Market Intelligence. They dumped shares in nearly every sector, although they increased their exposure to real estate. That's a questionable damn decision. That's all I'll say about that. Guys, think about this for a moment. Retail just sold massively heavy in October, right? What do you think happened to all retail's favorite stocks, all their favorite stocks, just this month, since they sold in mass? They're the biggest they sold in years, okay? $16 billion last month. Oh, baby, does this get intriguing. This is AMD stock just this month, okay? I just want to look at all these stocks this month, okay? Right after Wall Street sells, how did their favorite stocks end up doing, right? Well, AMD's already up 18.6%. Folks, we're not even halfway through the month. We're not even halfway through the month. AMD's already up 18.8%. I mean, that's great performance. If you want a stock that gets 18.8% a year, that's great performance. You should be very happy with that stock. 18.8% in less than a half a month? You got to tell me retail just sold, okay? Nvidia stock is up 19.5%. So far this month. Nearly 20% gain for Nvidia just this month. Palantir. Oh, come on, man. This has to be some kind of sick joke. I mean, some kind of sick joke. Retail just unloads stocks, $16 billion, and Palantir goes up 32% already this month. 32 flippin' flapjackin' percent this month, folks. You got to be kidding me. This is like the Saw of the stock market, okay? This is real life Saw, and it's called the stock market. I mean, how brutal is that? Retail sells $16 billion, the highest they've sold in years, and then freaking this happens to all their favorite stocks? Tesla, even Tesla, is up nearly 11% so far this month. 11%. My gosh. Meta, 9.82% gain so far this month, okay? It reminds me of this meme. Have you guys ever seen this meme before? Of this guy on the phone, and it's like, retail sells, and then he's like, buy it all. Yeah, retail sells the most in years, $16 billion in stocks. Buy it all. Buy every oh my gosh, okay? And the way I think about it is like this, okay? And this is how I run my portfolios, and this is how I think, okay? I want to own assets that have growth and have profits, okay? I don't care Wall Street says this, Wall Street says that. I don't freaking care, okay? The bottom line is I want to own assets that have, in my opinion, going to have nice growth in the future and have nice profits in the future, right? I want to own more and more of the world. And if Wall Street wants to give me silly pricing on stocks that, in my opinion, have very nice growth in future years and are going to, produce tons of cash flow and tons of profits in future years, I want to go ahead and take advantage of those, okay? If we look at my Magnificent Seven, let's take a peek at my Magnificent Seven, okay? These are the 7 biggest stock positions I have in the public account, which is nearly $1.7 million, right? And look at my stocks: Meta, Tesla, Amazon, Palantir, Elf on a Shelf, PayPal, and Skyworks Solutions, right? And think about those stocks and think about what they all have in common. Well, they all have in common that they're usually very nice growers over the years. They all produce very nice cash flows and profits and operating incomes and all those sorts of things. If I had to ask you, if I added up what those 7 stocks made in operating income in the last 3 months, the number would be pretty shocking, I think, to most folks, okay? Here's the number, okay? My Magnificent Seven has generated over $28 billion in operating profit, okay? Operating income, I should say. Operating income in just the last 3 months. This is based upon the quarterly numbers these companies just reported. Over $28 billion operating income in the last 3 freaking months, okay? That's what I like to own. The way I think about the stock market is like the consumer and Black Friday deals, right? The consumer thinks about these Black Friday deals, and they're like, oh man, I can't wait to go get that new blender. Can't wait to go get that new coffee maker. It's going to be $10 off, man. It's going to be $15 off. It's going to be 20% off. Like, this is going to be awesome, right? And the way I think about the stock market is like, I don't have to wait for Black Friday. The stock market is going to give me all these different ridiculous deals during the trading year, and I've got to take advantage of those deals, okay? And so I'm going to go out and buy my stuff. I'm not buying a blender for $10 off or a coffee maker for $15 off. I'm out there buying great quality companies and owning more and more of the world over time, okay? I don't have to wait for that once a year deal on the consumer items, right? That's how I like to think about it. And by the way, you want to talk about the real Black Friday deal? The real deal of the century? It's coming. It's coming. It's 10 days away, folks. And that is for this tier. It's usually a $125 tier. We're doing it for $62. Only $62 on Black Friday, right? My number 1 course ever, my Become Master Stock Market course, which is usually a $997 standalone product. Ability to see the stocks and the moves I'm making in that Patreon portfolio through Fidelity Investments, and you get to see exactly how I diversify my portfolio around. That's a freaking deal of the century, folks. Make sure you sign up for that. That's pinned comment down there. Enter in your info and we'll send you over that deal when it drops on Black Friday. That's a real deal you need to get this year, okay? Nothing more valuable you're going to buy on Black Friday for $62. And that, holy smoke, is no joke as deal, okay? That's pinned comment down there if you want access to that. It's a one-day sale on Black Friday. Now, Nvidia, big news came out here today, okay? Nvidia unveiled their new H200 chip, right? And it seems like, damn, Nvidia's just moving so fast. I mean, everybody just getting caught up on the H100 chip, okay? On Monday, Nvidia announced the new H200 Tensor Core GPU. The chip incorporates 141 gigabytes of memory and offers up to 60 to 90% performance improvements versus its current H100 model, which the H100 model is already like the gold standard, okay? And they're talking about offering up to 60 to 90% performance improvements over the H100, which was already the gold freaking standard. Are you kidding me? Like, are you going to be kidding me? The H200 powered systems will be available in the second quarter of 2024 for NVIDIA's hardware partners. So I've really heard it's more of the second half in general for NVIDIA, right? And so it's going to be available for AWS. It's going to be available for Google Cloud. It's going to be available for Azure, Mr. Softy, right? And so, I mean, what a huge deal. And I thought this was a good moment to speak about because this is another thing I hear a lot of these Wall Streeters talk about all the time. Oh, well, this company's going to catch up to NVIDIA. And this company's Here's the deal, okay? I'll put it to you like this. I did track in college, right? And I was a sprinter. And I'll put it to you like this, right? Usain Bolt, the greatest sprinter ever, right? You could race him in a 100-meter race, right? And 40 meters into the race, you might be slightly behind him. You might be within distance. And so it's very easy to say, just run faster. Just freaking run faster and you'll catch up to him, right? You're going to catch up to him. Just try harder. Run faster. By the way, if you tense up too much, you're actually going to run slower. It's not something a lot of people realize. But, that's what it looks like, right? You're like, damn, I'm right there. I'm right with him. I'm a little behind him, but I'm right with him. I'm going to catch up. And then by the end of the race, his gap is bigger than ever, right? And all these guys are like, damn, Like, bro's just too fast. Like, I can't freaking catch this guy. Like, holy smokers, this is no joke. Like, I was somewhat close, and I thought I could catch him, but he just kept moving too fast, right? The same thing happens with companies. A lot of people think, like, oh, these other companies can just catch up to this company. It doesn't work like that. It doesn't work like that. The problem is you're trying to catch up to where that guy or that company was. Meanwhile, they kept moving forward even faster. And if they're already a faster mover than you, then they just keep moving faster and keep moving faster, and they're skating to where the puck's going a lot faster than you're skating to where the puck's going. You're trying to skate to where they were. There's a difference, right? I'll put it like this, okay? This is good stuff, okay? They're skating to where the puck's going. You're trying to skate to where they were at. That's the difference. Everybody's trying to skate to where Nvidia was at. They're still trying to catch up with H100. And Nvidia's already on the H200, okay? And by the way, they're already working on stuff way past H200 right now. They're already working on the H300 and 400 right now. And people are still trying to play the catch-up game of like, we're going to try to catch up to H100. By the time people have really caught up to the H100, Nvidia is probably already going to be on the H400 by that point in time, okay? They're already going to be across the finish line. And so that's the thing with great companies, great innovative companies. They keep the pedal to the metal and they expand their leads over time, right? A great company like I own, Elf, which has given me a 1,200% gain. I can tell you there's going to be a lot of companies that try to copy what Elf has done. Over the last 5 years and over the next 5 years, a lot of companies are going to try. Good freaking luck. It sounds so easy. It sounds like, oh, I could just do what Elf's doing and blow up on social media and, make these great products for cheap prices and make those more. Try to do it and see what happens. You're going to find out it's a lot damn harder, right? How many freaking automakers want to become Tesla, right? I'm sitting on an 848% gain, $333,000 gain on Tesla stock. And this is in a time period with super high interest rates. Imagine when interest rates drop eventually, whenever that comes, right? Or the consumer gets in a better place. One of those two scenarios happen. Imagine what Tesla's going to be making then. Okay, that's a whole different story. Everybody wants to be Tesla. There's not an auto company that wouldn't trade places with Tesla today. Every single auto manufacturer in the world would trade places with Tesla. And they're all trying to copy Tesla. And you know what they're all realizing year after year after year? Damn, it's hard to even catch up to where Tesla was 5 years ago. But here's the thing, Tesla keeps moving forward faster and faster and faster. And this is why you're seeing everybody and their grandma do what? They're all trying to partner with Tesla. We're going to partner with Tesla. We're going to do this with Tesla, do that with Tesla, right? We need to use their supercharging network. They're all, and the weaker players are folding. A lot of these weaker players are on the verge of bankruptcy over this next year or so, right? Big announcement came out here today, big news in regards to Tesla. EG Group inks deal to use Tesla's ultra-fast chargers across Europe. Wow, convenience retailer EG Group announced on Monday that it has agreed to a deal to acquire Tesla's latest ultra-fast charging units for the company's fast-growing EV point business across the UK and Europe, and they're going to brand it as that as well. The hardware will operate on an open network basis, meaning that all drivers will be able to access EV point chargers regardless of the brand of vehicle they drive. The chargers will also support the plug-in charge protocols, which simplifies and automates payments. The first of the new charger units are expected to be rolling out before the end of the year. Wow. Financial terms were not disclosed in regards to the deal, right? And you're just seeing more and more of this, of just different people, whether they're in the auto space or not, trying to partner with Tesla. I can tell you on the energy side of business, I think there's going to be probably a lot of partnerships coming over this next few years as well, right? And I say to you, it's just a matter of time before these other auto manufacturers realize they are not going to be able to catch up to Tesla's battery technology and how their ability to basically make profits from their batteries and those sorts of things. And so I think it's a matter of time before you start hearing auto manufacturer after auto manufacturer over the next few years end up wanting to use Tesla batteries. And Tesla end up working deals where they're producing the batteries, the bottom of the cars, and making just crazy profits from that and on the software side as well, right? And I'm sure you guys have seen some of this, right? And this was last month out of Electric. Tesla announces 4680 battery cell production breakthrough, right? And so, Tesla just continues to move faster and faster on battery technology and every single technology because they've got arguably the most impressive engineer team, or certainly one of the most impressive engineer teams of any company out there, right? And so people are trying to, Ford and GM and all those other guys, VW, they're trying to catch up to where Tesla was. Tesla just keeps moving forward. And so by the time, if they can ever even catch up to where Tesla is today, Tesla's already going to be 3, 5 years, 7 years in the future, right? There's a great saying about Apple when Steve Jobs, passed away, that he had Apple, 5-10 years ahead of the competition, right? And that was true at that time, right? And it seems like, slowly over time, some people are starting to catch up to them, but that's the deal, right? Who wouldn't want to be Amazon? Who wouldn't want to be Amazon, right? Try to just duplicate that business model. No, Amazon just keeps moving forward faster, and faster. And you can't do it. Everybody would want to be Amazon. I mean, even a stock like I own, Shopify, they try to be Amazon. And then they realize, oh, hell no, we can't do this crap. We're going to stay asset light. And they sold off their businesses that were even going to try to compete with Amazon. These guys get into it. And these are other successful companies. And they realize, this is freaking hard. This is a lot harder than we thought. And we're not going to be able to pull this off. And so you end up having to dip, right? And so I think that's just a great lesson overall. Great innovative companies with great management teams and great growth profiles. If those companies keep the pedal to the metal, no one's going to be able to catch them. They're just going to keep moving forward, and by the time the competitors try to get to where they're going, why can't everybody be McDonald's? Why can't everybody be Starbucks? Why can't everybody be Walmart? Why can't everybody be Amazon? And yet there's only one of these sorts of companies. Those ones why can't everybody be Nvidia? Those companies keep moving forward faster and faster and faster, and just no one can catch up. No one can freaking catch up, okay? Now, last thing I want to say here today is this next 6 weeks, folks, stay focused, okay? There's going to be so much talk about Santa Claus rally, no Santa Claus rally, all this stuff. We got 30-ish trading days left in this year, okay? Stay focused on what you're doing, building up your portfolio, adding great companies that you want to own, not only in 2024, but in 2025, 2026 as well. Every time I go to buy a stock, I'm thinking, what type of stocks do I want to own over the coming years? Not just in 2024, but over the coming years, okay? So if I buy a PayPal, it's because I'm buying it over the next few years. If I buy a Revolve, it's not just because I think the stock could do well in 2024. It's also because I think it can do well in those years that are after that as well, okay? Stay focused on you. Stay focused on building your portfolio, owning companies you love, building a great portfolio overall, folks, okay? Appreciate everybody joining me as always. Thanks so much for being subscribed, folks. Make sure you get access to that deal. It's 10 days away, folks, the Black Friday deal. That is going to be massive. The only way to get access to that is going to be, we'll either send it to you over email, text it, something like that. So yeah, if you want to access that, pin comment down there. Much love and have a great day.